Hello again, I'm Scott Inman. Thanks for checking out the fastest 4 minutes in finance. Well, I'm a big country music fan. I like the new stuff, but let's be honest, a lot of it is not really country anymore. I love the country music that I grew up on, like Hank Williams Jr. Remember the big hit, A Country Boy Can Survive? I actually heard it the other day and one of the lines struck a chord. Interest is up and the stock market's down, and you only get mugged if you go downtown. That song was released in 1982, and here we are 40 years later, and with the possible exception of getting mugged downtown, the lyrics ring as true as ever. As a financial advisor, I've actually purchased more CDs for clients in the past year than at any time in my career. The reasons are laid out pretty well by old Bo Cephas. Both the stock market and bond market have taken a beating. At the time of this recording, the S&P 500 index is down 12.5% over the past 12 months. The NASDAQ is down almost 23% over that same time frame, and the U.S. aggregate bond index is down almost 8.5%. At the same time, inflation has driven up the cost of living, and interest rates have driven up the cost of borrowing. It seems the only silver lining these days is that those same interest rates have made short-term CDs more appealing. The rates have topped 4% over the past few months. That's about 4 times what you could have received in 2021. There is certainly a place for keeping some of your money in a safe, insured place if you plan to use it in the short term. Our clients who have purchased CDs have done so for reasons like inherited cash that they plan to use to purchase a home in the next year, or to earn interest on funds they need to keep safe because they will owe taxes in the spring from a real estate sale last year. But there are other reasons that you should not use to purchase a CD. If you want to purchase a CD with funds you have invested in stocks or even bonds because you're fearful of where the market is headed this year, proceed with caution. All of those losses in the market are only on paper right now. Selling stocks or bonds to purchase a CD would lock those losses in. You should also consider your time horizon. If you won't need the money for several years, it might make more sense to look to another type of investment that could help you better reach your goals. And finally, if you're considering moving a substantial amount of your assets into a fixed rate CD simply because you're close to retirement and you don't feel like you have the time to make up any more losses from the market, you could be trading one risk for several others. Now, we may be like Hank Jr. and just want to be the country boy who can survive, but making any investment decision should be part of your overall financial plan to do more than just survive, but thrive. If you don't have a plan, a genwealth advisor can help. Thanks for listening.